on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Choosing whether to save or invest your money can be a case-by-case decision, but our next guest has one suggestion for saving your money in a smart way. Erin Lowry is the author of the Broke Millennial series and a personal finance expert, and she's joining us now. Erin, thanks so much for being here. So in a recent column you wrote for Bloomberg, you say that what-if savings accounts are underappreciated. Talk to us about what you meant.
Really, the concept of a what-if savings account is putting money aside without a true structured goal or timeline. You know, the bedrock of personal finance planning and financial planning in general is having a goal. And then you put a timeline with that goal so you figure out how much money you need to save per month, per year in order to achieve it. But we have things that come up in life where we're not totally sure if and when they might happen, but it's still nice to be putting money aside for those what-if situations.
Erin, do you have a rule of thumb here? I once heard that you should be saving at least twice your rent in case you were to lose a job and you need a buffer. But is that the right way to be thinking of it?
So to clarify, is that twice a rent per month? Because
per month.
I got to tell you, I live in New York City, and that is not tenable for me with my household income. And I think that that's so dependent then on where you live. It's great for people to have rules of thumbs, but at the end of the day, personal finance answers are always it depends. It depends on your unique situation and what your goals are. I would love to see everybody have a 40-50% savings rate, but again, that's really not realistic, especially for so many millennials, particularly coming out of a pandemic, who might be under or unemployed.
And so then, Erin, what are some of the things that you would suggest for people to be thinking about when it comes to savings? What are, we were just talking to one of our reporters who said time is a big factor. I'm curious what you would say.
Time absolutely is a big factor. Fundamentally is what you should be connecting. Your time horizon is what you should be connecting to when you're figuring out how much to save. Now, for me with these what-if savings accounts, my husband and I have two. One of them is he's a big Buffalo Bills fan, and he sets money aside every single month in case they ever go to the Super Bowls. There's money set aside for him to be able to kind of on a whim be able to go and participate in that experience. But the other thing that we set money aside for is the possibility of having a child. Right now, we don't have a timeline on that. We're not even entirely sure we want kids, but we set some money aside every month just to give us the opportunity, should we make that decision, that there is a lump sum of money set aside to offset the cost of pregnancy and delivery. So it's something, too, that you can just be setting incremental amounts. And oftentimes when I'm talking about these what-if savings funds, we're talking about like a dinner out, a couple of cocktails in a month, like a nominal sum of money in your overall budget, so that you're really not impacting your other financial plans that are on a real timeline.
And the name of your book really implies this issue here. I want to address the fact that savings can be a luxury for most people. Why are millennials so broke that you're finding on average?
Well, a lot of it has to do with certain situations completely outside of our control that has happened. Graduating into or shortly after the Great Recession, getting hit with this pandemic at around a time a lot of us were probably just starting to get on our feet. You're looking at wage stagnation, all sorts of different factors. But part of it, too, at this point that we have to be thinking about, and the crippling student loan debt situation, particularly for American millennials being a big problem, a lot of times as we're just starting to get control or feel like we're in control, a big thing can happen, whether it's job loss, whether it's a pandemic, and all of a sudden you're back in that scramble mode, kind of that broke mentality. Now, one of the things you mentioned earlier in the previous segment talking about 401ks, taking advantage of any sort of opportunity you have to be setting money aside, but also thinking about the fact that it doesn't have to be a big lift right away. I think sometimes we get too fixated on those, like have 6 months worth of living expenses set aside. Let's just focus with 1 month. Let's start there. And let's start with that being a really good goal because that feels a lot more attainable. That's a big thing when it comes to money goals, is it can just feel so daunting and overwhelming. If you can just start with $10 a month aside, $5, whatever you can do, 0.5% of your salary into your 401k, something little, but at least the habit, the foundation gets started.
And do you see Erin, go ahead.
Oh, no, I was just saying at least the habit gets started.
And do you see Generation Z sort of going through some of the same discussions that millennials had to go through at our point in time when we were going through a previous recession? I mean, I'm curious how Gen Z is sort of changing the way that they think about money and saving.
I absolutely feel like they're coming up against a lot of pain points in the similar way that millennials have as well. They still are also very burdened with student loans. My big hope, especially for middle to younger end of the Gen Z generation, we're looking at people who maybe are more comfortable talking about money, maybe look at millennials as a cautionary tale in terms of how much student loans to be taking out. So perhaps we'll provide an opportunity for them to learn and understand a little bit more about their money before signing on the dotted line and kind of learn from our experiences, as long as we're open to having those intergenerational conversations.
Well, also, you mentioned this earlier that it's hard to figure out how to save sometimes. Is it best to put money in your corporate 401k plan? Is it best to get a CD right now? I mean, the rates are so low, but it still locks up your money. And, I know for me, it doesn't let me touch it for a while. That's the benefit of it for me. But, there are a lot of options out there. And so if you have any advice to give somebody, what would it be on how to get started in a bigger way?
When we're talking about bigger way, I always like to think about retirement. And if you have access to a 401k plan at work that has an employer match, please start taking advantage of that match. I know that this is a broken record conversation when it comes to personal finance experts, but if there's free money on the table, take it. And if, let's say that your company matches up to 5%, that doesn't feel doable, do 1%, do 2%, just something, because it's automatically doubled. And the other thing, too, is having money automatically routed out of your saving or out of your checking account every month into savings, just a little something even. And then I would encourage anyone who is on a goal or on a path to try to save more, inch it up just a little bit every 3 to 6 months. So if we're looking at a retirement plan, maybe every 6 months, increase it by a percentage until you're at your goal. So it's a very slow burn. It doesn't feel so painful. It's not like you went from 0 to 10% overnight. And that's a much more achievable way to get to your goal.
And Erin, you really encourage people to talk about these things, right? Don't make any of these decisions in a bubble. Sort of talk with your friends and assess your own situation, right?
Absolutely. And so much of this is we don't know what we don't know at the end of the day. A lot of us never really were taught about money, never learned about money in school. I'm somebody who studied journalism and theater in college, and now I write professionally about money. So trust me, you can learn all about money. It is really important, though, that you never just discount this as something that, oh, this is above my comprehension, I can't understand this. You absolutely can. You just need to have conversations or consume material that makes sense to you and connects with you.
Erin Larry, author of the Broke Millennial series. Thank you so much for your time. Jen, savings, when you talk about Wall Street and investing, it's not the coolest topic, but when you look at a bank account that doesn't have much in it, it all of a sudden gets to be a much more interesting conversation.
Yeah, and one that really affects everyone, right? And something that you need to be thinking about. And so glad we had Charlie and Erin on to talk to us. All right, that'll do it for Quick Take this hour, but there's more Quick Take coming up in just a minute. I'm Jennifer Zabasaja.
And I'm Shonali Bassick. You can check out the latest stories at Bloomberg.com or at Quick Take on social media. Thank you for watching.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Good afternoon, everyone, and welcome to Quick Take Stock. It's a show for retail traders who are eager to get smarter. I'm Tim Stenovec.
And I'm Katie Greifeld. It's noon on Wall Street, and today we're taking stock of the upcoming earnings this week as the S&P 500 notched a sixth straight month of gains in July. How the infrastructure bill could impact anyone holding or hodling cryptocurrency.
I see what you did there,
I got
Katie.
the lingo. And Cathie Wood, she's been on a hot streak, but a potential new ETF would allow investors to bet against her gains. Let's get going.
Good afternoon, everyone, and thank you so much for joining us today. It's the first trading day of August. Happy August, everyone. And we're also smack dab in the middle of earnings season. About 60% of companies in the S&P 500, they've already reported earnings for the most recent quarter, but we've still got just about 148 exactly more earnings reports for companies in the index coming out this week. Katie, it is another big week. Tell us what is on your radar.
Well, Tim, you're right. We are just past the halfway point of this earnings season. But like you said, we still have 148 companies to go just this week alone. So it's going to be a big week. And some of the companies I'll be keeping an eye on are Discovery, Clorox, CVS, Marriott. They should give an interesting read on how companies are handling the economic reopening. But let's turn to the markets and look at the environment that these reports are landing in. We are looking at the S&P 500 here. It's rallied for 6 straight months. That is the longest streak since 2018. And Tim, we talked about this last week, that the bar is just super high for these companies so far. 87% of the S&P 500 companies that have reported have beaten estimates. So that's a high bar to clear if you're a company reporting this week. Yeah, and the moves that we've seen haven't been very significant, even if companies have beat them significantly. Let's get some more analysis with Callie Cox. She's Ally Invest Senior Investment Strategist. Callie, I want to talk big picture here because we are seeing a ton of optimism on Wall Street. The headlines, though, that we're seeing today, that we saw all last week, all about the Delta variant. Is the market essentially telling us not to be concerned about the rise of the Delta variant?
Yeah, so the Delta variant has really caught investors off guard, right? And the market's having a hard time digesting exactly what it could mean. Obviously, it's tragic and unfortunate, but what could it mean for the economy? We're not quite sure yet. Right now, the signals we're seeing are, the Delta variant, cases could pick up. COVID cases are already picking up. But, what does it mean for the economy? Chances are we're not going to see a downslide like we saw in March of 2020, especially with a significant part of the population vaccinated. So, investors are really weighing the headline risk here, but also thinking about, what does this mean for the fundamentals? Growth could slow down. Delta variant could hit growth. But at the same time, growth still looks to be above average for the rest of the year. So based on that, that could support the stock market.
Well, Callie, when it comes to the Delta variant, I'm curious to dig into the sector level, because if we look at the JETS ETF, for example, that tracks some of the biggest airline companies in North America, it's still up about 2% this year, but it's really come down in the past couple of weeks. It looks like, if you look at the TSA data, that people are still traveling, but how long do you think that can last, and where do airlines fit into that?
Yeah, so one way that you are going to see the Delta variant play into the stock market and, the moves that we see every day are this push and pull between the reopening stocks and the stay-at-home stocks. We've really seen the baton trade back and forth recently with the reopening stocks, like you mentioned, Katie, having a good week and kind of carrying the market last week. A lot of that is earnings driven for sure. Big tech, had good earnings reports, but didn't have great guidance. But at the same time, reopening stocks are still projected to drive the bulk of earnings growth going into 2022. So investors are really thinking about that. However, short term, we could see that flip back and forth. As you can see, like over the past month, we have seen that flip back and forth quite a bit. So depending on the headlines, depending on the day, We could see, a bid into stay-at-home stocks or, a bid into reopening stocks, depending on how investors feel about Delta.
Hey, Callie, you mentioned the March 2020 lows, and I want to talk about some tweets that you sent earlier today that reference those. You said you were thinking a lot this morning about how the S&P 500 would need to drop 20% to reach pre-COVID highs and about 50% to hit March 2020 lows. Remember, folks, you may never see today's prices ever again. You continued, we need a financial crisis-sized pullback, roughly 50%, to get back to the March 2020 lows. That's a huge drop historically, so chances are that COVID low was indeed a generational buying opportunity. What would you say to somebody watching right now who may have stayed on the sidelines then because, hey, they were a little concerned about what was going on in March of 2020. They were going to lose their job. They perhaps didn't have a lot of cash to throw into the markets. For a young investor, did they miss out?
Yeah, so that's a good question. And I think we're all wondering that. I have friends and family who are wondering that. And I did get a little heady this morning, but I think it's so important to think long-term. At Ally, we are talking to the long-term investor. And a lot of the questions we get are, when is a good time to invest? It doesn't feel great right now. Should I invest? Should I not? But it's so important to remember that history shows us that the market tends to go up over time because it is a bet on society and society's ability to recover. So any of the viewers watching out there, thinking about if it's time to invest, definitely think about your goals, think about why you want to invest. If you are thinking long-term, then you need to consider your personal situation as well. But, it's never a bad time to start. It's never a bad time to start. And again, think about your personal situation, think about where you're going, but don't wait for the market to drop because we do know markets go up and down, but they tend to go up over time. And we don't generally recommend market timing. We don't recommend it at all. So don't try to time the market, and expecting the market to drop so you can buy in at lower prices is market timing. So try to avoid doing that.
Well, Callie, I do want to talk about that, even though you just said that it's never a bad time to invest. But let's talk about where we are and where we're going, because like I said in the intro, we're coming off 6 straight months of gains. And Bloomberg actually crunched the numbers and found that the average return 12 months out from a stretch like that tends to be 8.3% about. But if we look at seasonals, August tends to be a pretty slow month for the stock market. So where do you think we're going? Do you think that we're going to continue to grind higher here, or are markets due for a pullback of sorts?
Yeah, Katie, you're right. August is a slow time for the stock market, and it's actually the beginning of a slow 3 months for the stock market. I mean, throw in there that we haven't seen a 5 to 10% pullback all year, which is extremely unusual. We tend to see 2 or 3 of those a year. And things don't feel great right now. The Delta variant is, raging again. There's a lot of uncertainty about growth. It might not feel like the best time to invest. And, markets could fall from here. Markets, again, do go up and down. I think the wise investor would, look at their portfolio and maybe, add in a few defensive stocks. Defensive stocks haven't done well recently, but they have tended to do well on down days. So look at your portfolio, see where you could add in some safety there, and hold on to some cash too. Cash gets a really bad rap these days, but if you see the markets fall and you're a long-term investor, cash is the way that you're opportunistic. So, things don't feel great right now, but depending on your time horizon, depending on how long you're investing, it might be a good time even now to buy in.
Katie talked about some of the companies that are reporting this week. Caterpillar among those. We expect to hear from Square, Roku, and more, Discovery. What is specifically should investors be watching for from those companies to get an understanding of how those companies think the economy is going, and really how they think the rest of the year is going to go, Callie?
Yeah, well, earnings season has been really interesting lately. I mean, everybody expected this to be a good earnings season, right? It was historic growth for both sales and profits. So, we've seen the market hasn't done much since earnings season started, though, and we've seen investors really dig into the details. What companies are saying in their earnings calls, what executives are saying about the outlook. And that's why we've seen this mixed reaction. Again, I mentioned big tech last week. I mean, that's why we saw big tech sell off quite a bit after some gangbusters earning results. Right. So, we're seeing investors really dig in and see what companies are talking about in terms of costs, in terms of profit margins, in terms of use of cash. And they're really, thinking about the future here. They're thinking about like, okay, growth is great now, but what am I expecting in the future? And you mentioned Caterpillar as well. Caterpillar is up today. They did have a good earnings report. The guidance was a little weak, but I think it goes back to the fact that, it's tough to judge what's happening in the future. And right now, investors are really wondering hard, and they're looking for clues about what's going to happen in the future, right? So the infrastructure bill is one thing that plays in Cat's favor. Of course, Caterpillar manufactures all this equipment. So, if the infrastructure bill comes into play or if it's passed as law, we could see, more business go to the Caterpillars of the world, right? And industrials, I will throw in too. Industrials and cyclical stocks have much stronger earnings growth estimates going into 2022. And a lot of that has come from this, earnings management commentary type stuff that we've been hearing from them. So, investors are thinking about the future. Second quarter results are looking behind them. So you really need to dig into the details about what management's saying.
Well, Callie, I'm so glad you brought up Caterpillar and the infrastructure bill, because we should probably talk about it. It's pretty big. $550 billion. It's making its way through Congress now. What could this mean for the market? You said that it could help companies like Caterpillar, but broadly speaking, is it baked in, or there's still movements to be had should this pass?
Yeah, well, that's the million-dollar question, Katie. I mean, it's hard to say considering that industrials have done so well this year, and it's hard to quantify what exactly an infrastructure bill could mean for these stocks. Obviously, it would be a positive thing, but how positive would it be? It's really tough to say right now, especially with all the details in flux. So right now, infrastructure bill or no infrastructure bill, obviously the infrastructure bill would be a positive for the market. It's fiscal stimulus. It would be especially positive, or it could be especially positive for cyclicals. But at the same time, if we don't get it, we're still expecting above average growth in the second half of this year and healthy growth going into 2022. So it's not like not getting it would cause the market. We don't expect it to cause the market to fall apart, going into next year. Could cause a sell-off. We could see a little bit of sell the news there, but at the same time, we don't expect this to be a deal breaker for the market if it doesn't happen.
Callie Cox, Ally Invest Senior Investment Strategist. Really appreciate you taking the time and joining us today on Quick Take Stock. Thanks so much. Well, coming up next, we are talking more infrastructure, specifically with regard to crypto infrastructure and how Congress plans to tax digital tokens. We'll be right back. You're streaming Quick Take Stock.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
here's a look at Bitcoin today. It pulled back to around $40,000 after climbing over the weekend to the highest level since May. The token has been helped in recent weeks by supportive comments from billionaire Elon Musk, also ARK Investment Management's Cathie Wood, also due to speculation over Amazon's possible involvement in the cryptocurrency sector. We talked about that last week, and then Monday after the markets closed, Amazon came out and said, wait a second, we are totally denying that report. We are not hiring anyone related exactly to that. What do you make of the moves, though, for crypto and really in the last 8 days?
Yeah, well, I mean, it's been supported a little bit. You are seeing it back trading around that $40,000 level, but it's been a brutal few weeks for Bitcoin. If you think about what started it, the ESG concerns over mining, then China cracking down on trading, and now the U.S. may be taking a page out of China's book. It's coming at it from all sides for Bitcoin.
Well, let's also talk about taxation, because another big story in crypto is the U.S. infrastructure bill, which includes some changes to rules around cryptocurrency disclosure, which would require crypto brokers to report transactions to the IRS. Also would force businesses to disclose trades of digital assets of more than $10,000. These provisions, they are designed to raise $28 billion, which of course would pay for parts of the infrastructure bill. Joining us now is Kristen Smith. She's Executive Director of the Blockchain Association. It's an organization that's dedicated to improving the public policy environment for crypto networks. Kristen, great to have you on the show. I know the Blockchain Association is at odds with this bill. So what in particular do you see as the issue with it?
Well, the biggest issue with the bill is that it intends to do something and in reality does another. For a long time, the Blockchain Association, and particularly our traditional crypto exchange members, have been long engaged with the IRS and congressional committees about finding a right way for these exchanges who have customers to provide 1099 reporting to those customers at the end of the year. Everyone is in agreement on that. But the problem is that the way this language came together in a very hasty manner is that it was crafted in a way that captures all sorts of different actors within the crypto ecosystem. So for example, Bitcoin miners or people who are staking tokens to help support and run the network. Those types of entities could potentially be captured by this bill. And these are either individuals or organizations or small players that don't have a customer relationship with the information that's flowing through, flowing through the network. So it would be impossible for them to comply and would probably result in much of the activity here in the United States moving overseas. So this is an unintended consequence. I also think it's an unintended goal of the people who crafted the provision. But when these things start to get moving quickly, it takes some time to unravel all of that work, and that's what we're working on right now.
And so, Kristen, when we were chatting before the show, you said that it's been nonstop on your end, and you're quoted in a Bloomberg News article from last week saying that we're pushing every lever right now to change it. Could you expand on that? How are you working with policymakers on this bill?
Well, first of all, the industry is working together really well. There are several crypto policy organizations in Washington, D.C. There's some large companies that have government relations teams. We are all coordinated and lockstep in our approach to dealing with policymakers, and that's a very important part to achieving success. Up until we saw the sort of final draft text that is going to be debated on the floor for the next couple of days, we were working vigorously to get that change. It's a 2,700-page bill, and our provision is only about 4.5 pages. So it makes it difficult to get the attention we need. But we definitely have the key people who will be making these decisions on alert and are working right now to figure out if there's a path to bring an amendment or perhaps take some other action to get this language changed before it leaves the Senate. So everyone's been burning the candle at both ends and working very hard. And we've been really pleased with the engagement with the Senate offices. And we hope that we're able to get the fix in before the bill passes the Senate sometime later this week.
Kristen, this is a show for retail traders. It's a show for people who are interested in crypto and perhaps do own different cryptocurrencies. What's the message that you have for them? Why should they be concerned about the language as it is in the proposed bill right now?
Well, listen, if the language were to pass today and a very broad interpretation of the definition of broker were enacted by the IRS, it would be very crippling for the crypto industry here in the United States, and we would see a lot of that activity go overseas. I don't think I'm hopeful that we won't get that far, but it's definitely, it's hands down the single greatest legislative threat that we've ever had gain this much momentum. And again, I think it was an unintended threat, but it is a threat nonetheless. And so it's really, really important that we get this fixed. And if we don't succeed in getting it through the Senate, then we'll have a bite of the apple in the House. Of course, this also gets tied into the larger politics of the infrastructure package in general. But I think it's really important that we get this done because this is not something we're going to want to have to spend years unwinding once it's enacted.
Kristen, if this is the single greatest legislative threat, then why are we seeing crypto stocks up so significantly today? You can see them right there on the screen right now. It doesn't seem like investors are having that reaction.
Well, I think maybe they have a lot of confidence in the Industry Trade Association, the Blockchain Association, and Coin Center and other companies to get this fixed. So trust me, I've been looking at my crypto holdings too, and I want to make sure we do everything that we can that regulatory.
Director of the Blockchain Association, Kristen Smith. Kristen, thanks so much for taking the time. No, you are busy, so we appreciate it. Well, we'll be right back. You're streaming Quick Take Stock. Don't go anywhere.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars. Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Well, Tim, here's a look at Cathie Wood's flagship ARK ETF over the past 2 years. It surged 150% in 2020, but now ARK-K, it's down over 3% this year, and that's giving bears a reason to bet against Wood, one of the most closely watched investors in the game. Enter the Short ARK ETF, which would seek to track the inverse performance of the $23 billion ARK Innovation ETF. And I mean, Tim, they say there's an ETF for everything, but now truly there would be an ETF for everything.
So you wrote this story late Friday. Was it late Friday or Saturday? I think I read it Saturday. It was Friday. Okay, I was texting you about it.
Yeah.
I was like, Katie, you were still at work doing this. The idea is that people who want to bet against Cathie Wood can buy into this and put their money where their mouth is.
Exactly. It would basically mirror the ARK-K ETF, the inverse performance. It would use swaps to do that. So it's a little bit complicated, but I'm sure we're going to get into it.
Let's do it.
Yeah. Well, let's bring in Bloomberg Intelligence's senior ETF analyst, Eric Balchunas. Eric, thank you so much for joining us. Let's start with, is it a risk to bet against one of 2020's most successful managers?
It's proven to be pretty risky. There's been some nice runs where ARK shorts have done pretty well. But over the years, over the past 5 years, if you're betting against her, it can also be very painful. ARK tends to go on these like 30% drawdowns, but then it shoots back up. It's been pretty resilient. And her investors have been pretty resilient as well. I think some of the people who short ARK, who I call Raiders of the Lost Ark affectionately, because they can never quite
That's
capture
an Indiana Jones reference for anyone who doesn't get that,
yes.
right?
Yeah, they're sort of the foil, and they can never quite get him captured, and so he always escapes. And it kind of reminds me of Cathie Wood in that she's able to sort of come out of these drawdowns very well, and her fund is pretty volatile. So there's upside volatility, which means you can get hurt if you bet the wrong way against her. And so we try to warn people that it's not such a gimme trade. And this is an environment where, with the accommodative monetary policy, that high growth names and to go down, but I can see the appeal. There's a interesting chart that some people put out about Goldman's non-profitable tech basket has almost a perfect correlation to ARK's fund. And that's, very tempting thing to short. But ultimately, ARK, I think, is a proxy for those stocks that are even further out beyond the Qs. And there's plenty of ETFs that are highly used that short the Qs. So it makes sense that something that's so popular as a proxy would probably, I think it's going to do pretty well and find an audience as a tactical trading tool.
Hey, Eric, how rare is it for there to be some sort of short ETF that bets against a really popular ETF or a really popular fund?
Well, it's happened all over the place, but it's only happened with ETFs to track an index, like the NASDAQ 100 or the S&P 500 or a sector. It hasn't happened against the stock picker. I mean, this is really the uncharted territory we're in. But that's sort of how popular she has gotten, in that her name and her picks are sort of now become a proxy for a certain kind of trade. So it's very normal. And, a lot of times when there's an area that gets popular, be it cybersecurity or cannabis, if you get $1 billion in assets and they start trading tens of millions a day, you will see the leverage ETFs come in and start to offer 2x or inverse. So, this isn't that big of a shock. I think the only thing that I'm not sure how they're going to work out is the IP. Can you put out an ETF that's on somebody else's IP like that? Potentially, I guess that could be fine. I don't know if they will need Cathie Wood's sign off, but if they can get it out, I think this isn't that unusual, to be honest.
So Eric, in just about 45 seconds, why would I buy this ETF versus just shorting ARK-K itself?
Convenience is one. People just like to hit buy and have the trade on rather than go and try to short something. I mean, there's also a cost to shorting. I forget what the borrow cost is, but it's not free. You do have to pay to borrow the shares and short them. And so it's almost like you're paying an expense ratio. So you have to weigh that. That said, if you have a long-term short on Cathie and you're willing to pay that, a short might be better. This ETF will be inverse, and so it resets every day. So it won't perfectly match up medium and long term. It's a daily resetting product. So the short only really perfectly works once a day, although it should be generally in the ballpark over the medium long term. But those are the two options I think you have. You can also buy put options on her ETFs, which a lot of people do.
Bloomberg Intelligence's senior ETF analyst, Eric Balchunas. Eric, always great to chat ETFs with you. Thank you so much for taking the time. Well, that's going to do it for Quick Take Stock today. Thank you so much for your time. We're going to be back here at noon Eastern time tomorrow, same time, same place. I'm Tim Stenevec.
And I'm Katie Greifeld. We'll see you tomorrow.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars. Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com webinars.
$567,715. That's how many homeless people the U.S. Department of Housing and Urban Development counted on a cold January night in 2019.
More than 500,000 Americans are homeless on any given night. But on the West Coast, the problem has grown worse in recent years.
Things haven't improved with the COVID-19 pandemic in 2020. Homelessness is on the rise in America.
San Francisco is rushing to contain a coronavirus outbreak that hit its biggest homeless shelter.
The homeless population in the county is up 13% from last year, as the city of LA saw a 14% jump.
Homelessness is growing, and governments have done too little, too late.
There is no doubt that the homeless are stigmatized. And all too often, we conflate the issue with mental health, or we just blame the victim.
Most people blame homelessness on the person, that they're a bum, or they're lazy, or they made bad decisions. If homelessness was a punishment for bad decisions, we'd all be homeless.
But this is a complex issue, and no two stories are alike.
There are actually a huge range of forces that often kind of come together and compound one another when it comes to how an individual falls into homelessness.
But how did we get here? How did a nation with such wealth and prosperity wind up with 500,000 people on the streets? And more importantly, what can we do about it?
It really is an urgent problem, and there's no reason that we shouldn't fix it.
I zoomed in with a journalist, 2 nonprofit execs, and a formerly displaced activist to better understand the confounding issue of America's homeless. Before we can understand American homelessness, we need to know a little bit about its origins.
In America, a lot of scholars look to the period immediately following the Civil War as the emergence of homelessness. A lot of veterans were returning from the war and returning to very overcrowded, industrializing cities that were very short on housing. Ever since then, there's been a population of people in America who have not necessarily fit into the sort of standard economic narrative. Fields like logging, fishing, mining, they wouldn't really have what we would think of as a stable home. Many people who were what we would call homeless actually did have shelter in places like single-room occupancy, apartments and hotels, in what they would call flop houses. In the 1950s and 60s, there was, at that time, urban renewal in cities. So there were just, numerically speaking, a lot fewer of these sort of transitional, very inexpensive housing options. A lot of low-income minority neighborhoods in American cities were ripped apart. A lot of the housing that existed in those neighborhoods was also gone. You have more deinstitutionalization of people experiencing mental illness, starting in the late 70s and 80s. The Department of Housing and Urban Development is getting defunded to a significant degree. And then just deindustrialization and rising economic inequality created a larger population of people that are sort of living in extreme poverty.
Now that, of course, is a very abridged version of the history of American homelessness. But the main takeaway seems to be that there is no one cause of the problem.
The reason that people fall into homelessness is that there's basically a series of unfortunate events that befall them. Some of those include losing a job. They include domestic violence. That's a leading issue for women in particular and families. Returning from war and experiencing post-traumatic stress, losing benefits, whether healthcare or welfare, having a health problem that costs a huge amount of money and bankrupts somebody. If you mix one of those things, or add multiple of those forces together, add in addiction or mental health issues.
While a multitude of factors can and do contribute to homelessness, what it really boils down to is right in the name: homes.
The truth is, the leading cause of homelessness is the lack of affordable housing.
People are not earning enough money to pay for the housing that's available, essentially.
There are approximately 11 million low-income renters in America. Research from the Federal Reserve found that 59% of Americans are one paycheck away from being homeless.
For every 10 of the lowest income renters, there's fewer than 4 apartments that are affordable to them. And so because there's such a shortage, we have nearly 8 million of the lowest income renter households, families, who are paying at least half of their income towards their rent. And many are paying much more. They're paying 60, 70, 80% of their income just to keep a roof over their heads.
So it's sort of like a game of musical chairs. You have the chairs are getting pulled away, and there are just more people than there are chairs to sit in.
COVID-19 has proven to be the straw that broke the camel's back for many of these struggling households.
I would say that COVID-19 has exacerbated the underlying crisis of affordable housing and the tremendous racial disparities in who is most harmed by the housing crisis. When you have such limited income to begin with, and you're paying so much of it to keep a roof over your head, you are always one financial shock away from missing rent and potentially facing eviction and, in worst cases, becoming homeless. So for many of these same households, the coronavirus is that financial emergency. They've lost jobs, they've lost hours at work, they've lost wages. It's harder than ever for them to cobble together what they need to make rent.
A Columbia University economist predicted a 40 to 45% increase in homelessness by the end of 2020. This is due to both the newly displaced as well as the strain COVID-19 has put on existing homeless communities.
COVID has definitely had an effect on the homelessness system. Shelters have had to follow the CDC guidance on social distancing. So they've essentially had to decompress or thin out their shelters. They can't serve as many people. Often they're serving half the number of people that they used to serve.
But there is a silver lining here. COVID-19, while devastating, has demonstrated what's possible when we mobilize to help the most vulnerable among us.
There's also now a lot more creative thinking around what to do to create more housing and more opportunities for safe places for homeless people to stay. There's been more of an embrace of sanctioned encampments, which are essentially places where local governments set up security and bathrooms. The other big thing is hotels were emptied out because tourists disappeared during COVID. And so a lot of cities started housing homeless people in those empty hotels.
Hundreds of men have moved from homeless shelters to a fancy hotel.
I called the Lucerne Hotel. They said they are not taking reservations until at least December.
It seems like that was it's a pretty successful way to actually prevent mass outbreaks among the homeless population.
One thing the coronavirus has shown is that governments, if they want to, can work with homeless service providers and increase the urgency and create programs to get people off the streets.
But clearly, we as a country are not doing enough.
We can end homelessness. We actually know how to end homelessness, and we've known how to end homelessness for a long time. The problem is there's not the public and political will to push all the policy change forward to create more affordable housing and to create programs in support of housing to get homeless people off the streets in the numbers that we need to get them off the streets to end homelessness.
I think there is a widespread sense among people who work in homelessness services that there isn't enough money devoted to this. And the top line answer is that it's such a big and complicated problem that there are several levers that need to be pulled from a policy perspective.
There's generally bipartisan understanding that we have a homelessness crisis that is unacceptable. There's generally a bipartisan understanding that we have a shortage of affordable apartments for the lowest income people. Where there tends to be a split is whether there's a willingness to fund the investments that are needed to alleviate the problems.
The major way that you're going to end homelessness by getting people into housing as quickly as possible. And since these are very poor people and they can't afford most housing, we're going to need housing subsidies to accomplish that. Many people, the majority of people who become homeless actually do exit homelessness. They get back on their feet, they find a job, and they don't enter the homeless system again. And it's not a long-term, lifetime sentence being homeless. So we have to remember that. It's something that for most people is a shorter-term experience.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars. Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars. Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Mexico City's metropolitan area is home to over 21 million people. For decades, it has been plagued by increasing overpopulation and serious air pollution. Its streets are gridlocked. Access to drinkable water is scarce, and left unattended, the city is expected to dry out within the next 30 years. Crime is on the rise, and the gap between the rich and the poor is massive and only increasing. Abject poverty is rampant. But there's a new mayor in town, and she has big plans for its future.
I hope to solve many problems. The city needs innovation. Innovation for me is the use of science and technology to change the way things work.
Claudia Sheinbaum is the first woman to be elected mayor of Mexico City. But that's not necessarily the most interesting part of her story. Because she's not just an ordinary politician, she's a Nobel Peace Prize winning scientist with an ambitious vision for this troubled metropolis.
My mother, she's also a scientist. She's a biologist, biochemistry. It was very important for me in my formation. I have a master and a PhD in energy engineering. I always like math and nature. Most of my academic life, I studied climate change and energy, the relation with energy and climate change.
Alongside her strong scientific background, young Claudia was raised to be passionate about politics.
Politics has been always part of my family, our conversations. In one sense, science teaches you to question everything. In politics, it's very important to understand why it's something happening, how to convince people of the ideas that you think are the real ideas to change your country.
Sheinbaum pressed on with political activism while thriving in her academic career in energy engineering for 2 decades. In the year 2000, she served her first public appointment as the Secretary of the Environment of Mexico City. She jointly received the Nobel Peace Prize in 2007 as a member of the Intergovernmental Panel on Climate Change. Then later became mayor of Mexico City's borough Tlalpan from 2015 to 2017. The following year, she was elected mayor of the whole city. Today, her passion for science and political action has culminated into a 6-year plan to fundamentally transform Mexico City into a cleaner, more equitable place for its 21 million inhabitants.
I want for my city in the 6 years that I'm going to be the chief of government to develop the access to rights, not only education, health, but also culture, sports, environment. The city is very unequal. What I want for the city is to reduce these inequalities. How to do that? Access to rights where they don't have, and a better environment, including resources to the poorest part of the city.
The mayor's grand vision includes 7 primary goals: reducing air pollution by 30%, planting 15 million trees, banning single-use plastics and promoting recycling, building a new waste separation plant for the city, providing water service to every home, constructing 100 kilometers of corridors for public transportation, and constructing and installing solar water heaters and solar panels citywide. So that's a lot. But despite the scale of these ambitions, Mayor Sheinbaum has aligned herself with Mexico's President López Obrador as an advocate for drastic cuts in government spending.
You cannot have a rich government and a poor people. So what we did is reduce government. Then you have a lot of resources for infrastructure and also for different actions. We built a new university in the city in 2 years. You need a lot of money. Where do you get this money? We didn't increase taxes. So you get this money reducing the government, and the other thing is stop corruption. We feel like a citizen governing citizens. We don't have any luxuries in our government, and this brings you a lot of resources to bring to the people and to reduce inequalities. Hopefully, in these 6 years, I can change many things in the city: public transportation, build parks, have digital access to many people. If you are able to change people and to give opportunity to young people, then the city is going to be different for the next years.
Mexico City has been hit hard by COVID-19, with over 156,000 cases and 15,000 deaths as of October of 2020. And while lofty government plans have often fallen to the wayside this year, Mayor Sheinbaum has managed to implement parts of her vision while handling the public health crisis. This is best seen on the Avenue of the Insurgents, Mexico City's largest and busiest street, where bike lanes popped up just as fast as the traffic died down from quarantine.
It's a very commercial street. We're asking restaurants and business and everybody if they agree to keep it. I want for everybody to be part of this, so that's what we're doing right now.
Still, there is little doubt that 2020 was not the kind of start that the mayor had hoped for her administration. But as Mexico City's first female mayor, she is used to some obstacles, and overcoming them has become somewhat of a preoccupation of hers.
Mexico has the culture of machismo. You can feel as a woman that you're less, that you're not able to do anything, because everybody tells you you're less than this man. And as long as you think that you're able to do it, it brings you the strength to do it. Paseo de la Reforma is one of the main avenues. You have many monuments, and they are only men. Right now, we are building the women heroines. It's the rescuing of women in history.
It only makes sense that Mayor Sheinbaum will face opposition against her ambitious vision for Mexico City. But her faith in science and its ability to address inequality and corruption in her city to the benefit of her countrymen remains unshakable.
We believe in social change by convincing people. We believe that Mexico has a great future. We end corruption in the country. And we believe that education, health, and housing are rights. They are not merchandise.
The tally of death and destruction keeps growing in the Northern California wildfires.
Thick clouds of ash are turning day into night.
2020 has been another record-setting wildfire season. Over the last few years, wildfires have been raging not just in the western US, but all around the world. Fires in the Amazon rainforest and Australia's brush fires are so massive that they can be seen from space. And while fires have long been a natural part of many forest ecosystems, higher temperatures and longer droughts caused by climate change are drying out forests and turning trees into tinder, meaning that in areas like California, wildfire seasons have become supercharged. Towns like Paradise, California, where the 2018 Camp Fire destroyed over 80% of its homes, are now grappling with how to adapt to this new age of fire, starting from essentially the ground up.
It is literally like the surface of the moon there.
2 years later, as the town still works to rebuild, the local Parks and Recreation District is beginning an ambitious plan to not just restore Paradise, but make sure it can better defend itself from the next fire. City Lab reporter Laura Bliss went to see this firsthand. So Laura, you just went to Paradise. Can you sort of explain what's it like to be there now?
It was a pretty haunting experience. Just thousands and thousands of homes literally reduced to shells, kind of gutted out foundations. It really still is this landscape of disaster.
So I guess what has the scale of rebuilding been like?
I checked with the city and there's been about 400 homes that have already been reconstructed and about 1,200 that are currently permitted. Even as this kind of instinct to rebuild is sweeping over the town and over former residents, there are some people who are thinking a little bit differently about what the future of Paradise should look like. One resident I spoke to has actually gone forward with selling her land so that eventually it might become part of a large green belt encircling the city to potentially protect it from future wildfires. And the person who's leading this project is not a member of city government. He's actually the manager of the Paradise Recreation and Parks District.
My name is Dan Efseth. I'm the district manager for the Paradise Recreation and Park District. So we provided everything from swimming lessons to people's first sports experience to hosting a variety of clubs. And we've been a kind of fabric of the community for decades. There were quite a few lessons from the campfire for us. One of them was the role we potentially have as a parks district.
And Dan believes what the Park District can start to do is improve what's known as the wildland-urban interface.
It's that line between kind of full-blown nature in kind of wildland areas and then the more developed space. In Paradise, that line was very much blurred or a razor's edge. So the idea here is that we would take that very narrow, razor-sharp wildland-urban interface now and expand it out in such a way that we would have a buffer. At the same time, providing these kind of extraordinary recreational resources and opportunities.
Dan and the Parks and Recreation District are in the very early phases of acquiring land in hopes of connecting them in what would be basically a giant moat of green space. So if the nascent plan is fully realized, thousands of acres of land could be used for respite and play by the residents of Paradise. Parks and baseball fields could also double as future fuel breaks for fire.
So areas that could be parks, they could be returned in some cases to orchards. We're interested in ag tourism in the area. So what we're trying to do is take this idea of defensible space around a house and expand that to defensible space around the community.
This plan is taking shape now as California and all of the Western US is on fire. Already this year, millions of acres have burned. Tens of thousands of people have had to evacuate. With climate change driving up temperatures and drying out forests, there's no question at the risk of catastrophe recurring in communities like Paradise, and Paradise itself is very, very real.
But for Dan, he's hoping that this plan can make Paradise not just a dire warning of the damage wildfires can cause, but rather a model on how to better protect communities in fire-prone regions.
Earthquake. We have major cities all up and down the West Coast that sit on major earthquake faults. We've mitigated that. We've engineered our way into having less danger associated with earthquakes in major cities. And we can do the same with fire. We just haven't done it yet.
This is Crystal Colden. She's a geographer by training.
I call myself a pyrogeographer because almost all of my work over the last 15, 20 years has been across this really broad spectrum of understanding how humans and the environment are affected by and interact with fire. There are a lot of different factors that contribute to changing wildfires, but climate change is the thing that amplifies all of those changes. So when we have a high temperature, there's a lot more heat, and that heat translates into fires being able to burn more easily. And because they're able to burn more easily, the conditions are drier, they're able to burn a lot hotter and a lot faster. And they're much, much more difficult for firefighters to contain.
While around the country, the number of wildland fires have actually been going down since 1990, the acres burned has at times doubled. The idea in Paradise is to use what's called a greenbelt to help slow the destructiveness of future fires.
Greenbelts are a type of fuel break, right? Greenbelts are, of course, these areas where a lot of the understory is removed under trees so that they become essentially park-like grasslands.
This is one of the jewels of our area. This is Paradise Lake. This was a location where the fire slowed down and stopped on its own. You can definitely see evidence of fire through this area, but the flame lengths are relatively low on these trees. Look at all of these small trees that were cut. These are cut before the fire. So that created a more open understory, which carried the fire less than it would have otherwise.
Dan wants to use the land that they acquire to create more areas that look like this.
We are going to pursue a strategy here, these oaks that are sprouting up, make them less bushy, make it less of a brush field over time, and encourage one particular leader out of here to grow into a tree.
It's really important to note that it's not going to be as simple as just planting some trees and grass and hoping for the best. Fire breaks are not invulnerable to the spread of fires. High winds, especially the ones that we've seen igniting some of the fires of these catastrophic events of the last couple of years, can carry burning embers as far as a mile.
A common misconception that people have is that a fire break should just stop a fire, right? That's the definition, right? It's meant to break a fire's forward progress, and it should do it all by itself. And that's really a misconception, because that is not what the goal of a fire break usually is. It is specifically meant to be a safe place for firefighters to take a stand and try and modify fire's forward progress as it's coming into a community.
You know, I keep thinking about this with the story that pulling off this green belt feels like a lot for a Parks and Rec district to pull off. How much does something like this cost?
I think Dan's back of the envelope calculation was that this is going to require, upwards of $10 million. And that's not even including, what it's going to take to maintain all of these lands. So just to give you a sense of what this would entail, one of the sections that Dan is targeting for this green buffer idea is a stretch of land that runs parallel to the Feather River Canyon. It's about 7 miles long and about 4,000 acres in total, containing hundreds of properties. About 80% of that area is privately owned. So on top of the costs of acquiring the land, it's also just the time and kind of resources that a little parks district may be challenged to work up to. Turning these former homes into parkland also hits on the ultra-sensitive question of planned relocation, which is this idea of government basically coming in to assist whole communities of people move to an area that's safer from a climate change perspective. And that's a really difficult question in a community that's already been deeply traumatized by this catastrophic experience.
We're absolutely of the mind we have to be respectful of all our decisions by landowners. I think the idea is right now there is such a receptivity to people wanting to do some things that help the community. Even if they choose to rebuild, then maybe they will provide an easement or a permission to have that trail that goes to the bottom of their property that allows for fuels reduction. Protects their property in exchange for a little bit of recreational value. I think that idea is pretty persuasive for a lot of people in our community.
Another issue Dan faces is that while there is a lot of anecdotal evidence that greenbelts can help, there actually isn't that much scientific evidence that confirms their effectiveness.
One conservationist I talked to for this story referred to green buffers as this funny combination of common sense with not a lot of scientific backup. But experts say that the signs are definitely out there that they can work.
It's something that is, not really making it into the scientific literature because it's been relatively rare. We don't have the sort of rigorous, reproducible scientific process that is often favored by scientific journals. But the anecdotal data are very much supportive of this. I actually published a study last year about a series of fire breaks and what was essentially a green belt around the community of Montecito, California.
Between the years of 1999 and 2017, Montecito would spend over $1.6 million on wildfire vulnerability reduction activities.
And over years, they did it little by little. It's individual properties, it's along roads where they have space to work. And when we actually went back and looked at the satellite data, it looks a little bit like a green necklace.
And in 2017, the Thomas Fire would put that work to the test.
The calmer conditions in Santa Barbara County Wednesday didn't mean flames stopped threatening multi-million-dollar homes in Montecito.
This is the 5th largest fire in California history.
And when that fire hit Montecito, there were winds blowing over 60 miles an hour. There were gusts up to 72 miles an hour, and that was the last thing we had recorded before the weather station burned down. And when it got to that green belt along the edge of the town, it basically did exactly what the green belt was designed to do, which is it died down. It allowed firefighters to move in close and work safely, to put water on the edge of the fire, and actually drop it down to the ground and put it out. And it is one of the few cases that is really well documented retrospectively and spatially of a green belt working well. We're trying to find more of those, but it's a challenge.
What we're talking about is an idea that how do we live with fire on this landscape? Potentially, we can serve a model on a whole bunch of different levels, not just the parks and how to protect the community, but how do we take care of our people?
We can do all the science we want, but if people don't see how it applies to them and how it can translate into an action that they can actually take, then the science doesn't actually, become applied in any way, shape, or form, and we don't change actions on the ground.
There's been a lot of interest in how do we protect paradise. There's lessons here. We're far enough along that we can demonstrate some of those lessons to those unfortunate communities that have suffered very similar situations. But also, there's models in here that are going to, help people live better lives in these mountain communities.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars. Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Hello, world. It's time for a thought experiment. Let's imagine the Cold War went another way. After the Nazis surrendered, the Soviet Union flexed its muscles and asserted its imperial might, from Tokyo to Tacoma. Memorials to the fatherland popped up around the globe. This would be the Washington Monument. This could have been your morning commute. And now let's fast forward. These were the first semiconductors. This is your keyboard. This was the first IBM computer. This is Facebook headquarters. This is Silicon Valley. Well, that didn't happen. But in modern Russia, it's easy to get confused. With an extra helping of spycraft, technology here developed a world apart from Silicon Valley. And that didn't change when the Soviet Union collapsed. "25 years later, Russia has copied large parts of the web the rest of us know and love. They built a Russian internet. And, with new laws cooked up by the Kremlin, protect it. And virtual walls are going up today. To find out exactly how the Russian web works, there was only one thing to do. I had to upload myself. Now that I'm inside, I'll meet a tech oligarch. Travel to Siberia to dive into a surprising and very remote startup scene. And chase the ever-elusive Russian hacker.
Using the machine learning, you could create a technology which helped to predict a crime.
Let's enter this parallel universe together on this episode of Hello World. Silicon Valley may be home to some of the biggest tech giants in the world, but it's being challenged like never before. Crazy tech geniuses have popped up all over the planet, making things that will blow your mind. My name is Ashley Vance. I'm an author and journalist, and I'm on a quest to find the most innovative tech creations and meet the beautiful freaks behind them. Hello, world. In Moscow over the past decade, the Tsar's gilded churches and monuments to the proletariat have given way to the symbols of modern Russia. Opulent capitalist towers that poke through the clouds. At the heart of this is where I met Dmitry Grishin.
Hello, Dmitry.
He's the co-founder of Mail.ru Group and one of only a few people east of Helsinki who can drive me to the office in his own Tesla.
I organized a drive for all my employees, like 3,000 people, because they want all to test how accelerate.
Dmitry sits atop a Russian tech empire and runs an investment fund for robotics with its roots in Silicon Valley.
That doesn't make you want to move there? You have so much going on here. Maybe one day. Never say never, right? Overall, then, do you consider the Russian tech scene competitive? Yes, and you know, it's interesting things that it's very few countries where and comparing, for example, with China, the internet is fully closed. We have Facebook, Instagram, all kind of Western players, and still pretty successful. So I think we have pretty tough competition. Why are Russian engineers so good? I think it's type of education. In Russia, still like mathematics and anything around engineering, they give you very broader view. So if you want to be very creative in technology, this is, I think, very good education. This is the guy, this is the office, yeah. Charging station here. Okay, so everybody knows when you're in the office. Yeah.
Dmitry's tried to copy Silicon Valley culture here in Moscow, where Mail.ru Group operates 2 instant messaging networks, a search engine, a price comparison website, and a ton of online games. They also control the 3 largest Russian social networking sites. The biggest one is VK, a Facebook knockoff. Dmitry and Mail.ru Group took over VK in 2014 after its founder, Pavel Durov, refused to reveal information about Ukrainian activists to the Kremlin. Durov lost his company and now lives in self-imposed exile. Dmitry's also one of the world's biggest investors in robotics. He put $100 million into American firms that produce some familiar faces.
What's been the biggest hit of all your robotics companies so far? I like all my investments, I can say. Definitely, I like BB-8 a lot. Also, Zipline, who do drones, long-range delivery, and now they start to do blood delivery in Rwanda.
Dmitry ships all kinds of nerd gear to Moscow to try it out and see if he wants to invest.
What's the point of the game? We should kill robots. So good for you. As someone who puts all this money into robots, aren't you upset? Wow, it's really cool.
To get a taste of the high life of a tech oligarch, Dmitry and I headed for a bite to eat at the tallest restaurant in Europe, 354 meters above the Moscow traffic. Tell me a little bit about your family history.
Yeah, I have pretty much engineering family, and I was born in a city called Kapustin Yar 1.
Kapustin Yar was the Soviet Union's answer to Area 51, a top-secret city where rocket scientists like Dmitri's grandfather tested ballistic missiles and rockets during the space race. Dmitri grew up programming on computers that plugged into Soviet TVs. But things really took off when he enrolled at Moscow State Technical University in 1995.
And the same year, Microsoft announced Windows 95. This famous song from Rolling Stones, Start Me Up. Next 2 years, I tried to write my own Windows. It's so expensive, Windows. Maybe I can just write cheap version. So I'm sitting, writing it, but after some time, I say, okay, no.
It's too hard. He might have failed to rewrite the world's most popular operating system. But he did stumble on the copycat business model that became Mail.ru Group. And at the height of the 2001 tech crash, he had to find a way to keep the new company alive with no cash.
I became like CEO of the company. And my idea was like, let's try to survive no matter how. We tried to do a lot of tricks. For example, by coming with my car, it was a Lada, Russian car. We put several servers like physically and move them to more cheaper data center.
It's hard to imagine now, but in 2004, only 9% of Russians had internet access. What was the Russian government's assessment of the technology industry?
They didn't know that they exist.
That all changed in 2012. Russia had become the biggest internet market in Europe. Some people used the web to complain about Putin and organize protests against his re-election. The Kremlin responded in full Orwellian glory, with a series of laws that allows them to flag opposition sites as extremist and blacklist them. Ever since, it's been hard to tell where the Vlad web begins and ends.
I think in the U.S., the idea is that the Russian government and the tech companies are just intertwined, and that if the government wants to read people's emails, whatever they want to do, they're going to let them do that.
If you follow the law, you're okay. Definitely the laws became more complicated, right? And sometimes